NYSE, CSQR, Csquare Inc. Report date July 11, 2026. Expected listing July 16, 2026. Price range $23 to $27. Deal size approximately $1.25 billion. 64 data centers, 389 megawatts of power capacity. Over 1,700 customers. FY 2025 revenue, $987 million. Section 1, Executive Summary. Csquare Inc., planned NYSE ticker CSQR, is a large-scale digital infrastructure provider preparing for its initial public offering on the New York Stock Exchange. The company operates as a carrier-neutral colocation and interconnection specialist, managing 64 primary data center sites across North America and the United Kingdom, providing approximately 389 megawatts of sellable power capacity as of March 31, 2026. Strategically formed in 2024 by its parent Brookfield Corporation, through the combination of Evoque data center solutions and assets from the former Csquare technologies. Csquare serves over 1,700 customers across 21 major metropolitan markets. The company's operating history, drawn from its predecessor assets, spans over 20 years. IPO key highlights. Shares offered, 50 million shares of common stock. Price range $23 to $27 per share. Implied deal size, approximately $1.25 billion at midpoint. Implied valuation, up to approximately $4.18 billion. Expected listing date July 16, 2026. Exchange, New York Stock Exchange. Use of proceeds, repay approximately $5.07 billion in outstanding debt. Post-IPO control, Brookfield retains approximately 67.1% voting power. Financial snapshot. FY 2025 revenue, $987 million, up 8.7% year-over-year. FY 2025 adjusted EBITDA, $390 million. FY 2025 net loss, negative $119.9 million. Q1 2026 revenue, $270.5 million, up 16.2% year-over-year. Q1 2026 adjusted EBITDA, $108.3 million, up 25.5% year-over-year. Total liquidity as of March 31, 2026, $357.6 million. The investment thesis rests on Csquare's ability to leverage its extensive infrastructure to capture the high-growth AI and hybrid cloud market. Revenue growth is accelerating. Q1 2026 came in at plus 16.2% year-over-year, well above the full-year FY 2025 pace of plus 8.7%. Adjusted EBITDA growth of plus 25.5% in Q1 2026 indicates improving operational leverage. However, investors must carefully weigh this potential against high debt levels of approximately $5.07 billion outstanding pre-IPO, ongoing net losses driven by interest expense, customer concentration risk, and the controlled company governance structure that limits public shareholder influence. Section 2, Company Overview. Legal entity, Csquare Inc., a Delaware corporation. Headquarters, 3100 Olympus Boulevard, Suite 510, Coppell, Texas. Exchange, New York Stock Exchange, ticker CSQR. Website www.csquare.com. Parent Brookfield Corporation. Data center sites, 64 primary sites. Sellable power, approximately 389 megawatts as of March 31, 2026. Markets, 21 major metro markets. Customers over 1,700. Interconnections over 36,600 products supported. Network providers over 200 available. Corporate history and formation. Csquare's corporate history traces a deliberate strategic assembly by Brookfield Infrastructure Partners. The legal entity was first formed as BIFII 3 U.S. Aggregator Delaware LLC in May 2018. The company's current form took shape in 2024 when Brookfield strategically combined Evoque data center solutions with assets from the former Csquare technologies. On June 15, 2026, in direct preparation for the IPO, the entity underwent a statutory conversion to Csquare Inc., a Delaware corporation. Despite the relatively recent combination, the combined operating history of the predecessor assets spans over 20 years of data center operations. This formation strategy is characteristic of Brookfield's infrastructure playbook, assembling complementary assets, optimizing operations, and then accessing public capital markets to fund the next phase of growth and deleverage the balance sheet. Mission and core values. The company's stated mission is to deliver exceptional service by placing customers and employees at the center of all operations. Csquare's core operating values are dependability, teamwork, integrity, continuous improvement, and safety. Section 3. Products and Services. Csquare's service portfolio is organized around 3 core offerings. 1. Carrier-neutral colocation. Colocation is the foundational service. Csquare provides secure physical space, redundant power, advanced cooling, and comprehensive physical security for clients' IT hardware within its data centers. Offerings span configurations from single server cabinets to private cages and custom-built suites. A key selling point is Csquare's stated 100% uptime guarantee, underpinned by redundant power systems built to N+1 and 2N standards. Critically for the AI era, facilities are engineered to handle high-density GPU workloads, often 40 to 100 kilowatts or more per rack, versus a historical average of 5 to 10 kilowatts. 2. Interconnection services. As a carrier-neutral operator, Csquare's data centers function as connectivity hubs. This neutrality allows customers to access more than 200 network and technology service providers directly within Csquare facilities. Services enable direct, low-latency connections to major cloud providers, including AWS, Microsoft Azure, and Google Cloud. As of March 31, 2026, the company supported over 36,600 interconnection products. Interconnection services are generally considered higher margin than base colocation services. 3. Csquare Digital Exchange. Csquare offers a proprietary software-defined connectivity platform, the Csquare Digital Exchange, that facilitates flexible, programmable interconnection between customers and network or cloud ecosystems. This platform supports hybrid and multi-cloud IT architectures, enabling customers to dynamically manage connectivity relationships without physical recabling. Physical security. All Csquare facilities feature multi-layered physical security, 24/7 on-site staffing, biometric access controls, and comprehensive video surveillance. Section 4. Business model. Revenue structure. Csquare operates on a recurring revenue model anchored by long-term customer contracts, typically ranging from 1 to 7 years in duration. Colocation revenue is derived from space and power leasing. Power costs are passed through to customers, which structurally protects Csquare's margins from energy price volatility. Interconnection revenue consists of fees earned for cross-connects and connectivity arrangements. Interconnection is higher margin, more scalable, and increasingly critical to the overall revenue mix. Customer segments. Enterprise clients hosting private IT infrastructure in a colocation environment. Network service providers using Csquare facilities as points of presence. Cloud service providers building access and interconnection nodes. Technology companies deploying platforms requiring reliable, well-connected infrastructure. Customer metrics and concentration. As of March 31, 2026, Csquare served over 1,700 distinct clients. The top 10 customers accounted for approximately 30% of annualized recurring revenue, a concentration level that represents a material risk factor, but is not unusual in the colocation industry. Industry and market analysis. The data center and digital infrastructure market is experiencing one of its most powerful demand cycles in history, driven by the convergence of artificial intelligence adoption, hybrid cloud architectures, and accelerating enterprise digital transformation. Key industry demand drivers. 1. AI and machine learning boom. The exponential growth in AI model training and inference is creating unprecedented demand for high-density power and advanced cooling infrastructure. Modern AI workloads require significantly higher power density per rack, often 40 to 100 kilowatts or more, versus a historical average of 5 to 10 kilowatts. This is the single most powerful secular tailwind currently driving data center demand growth. 2. Hybrid cloud migration and enterprise recalibration. Many enterprises that pursued aggressive cloud-first strategies are now recalibrating, moving certain workloads back to private colocation facilities while maintaining cloud connectivity. This trend directly benefits carrier-neutral colocation providers like Csquare. 3. Ongoing digital transformation. Broad enterprise digital transformation continues to drive demand for outsourced, reliable, professionally managed infrastructure. Competitive landscape. Equinix, ticker EQIX, is a public REIT and the global market leader with an unmatched interconnection ecosystem and over 250 data centers worldwide. Digital Realty, ticker DLR, is a public REIT offering large wholesale colocation and global reach. QTS Data Centers, backed by Blackstone, focuses on hyperscale and government. CyrusOne, backed by KKR, serves large enterprise cloud deployments with pan-European presence. CoreSite, part of American Tower, offers interconnection-rich urban U.S. markets. Vantage Data Centers is private and hyperscale focused. DataBank focuses on mid-market enterprise and edge data centers. Financial analysis. Income statement summary. FY 2025. Total net revenue, $987 million, up 8.7% year-over-year. Q1 2026 revenue, $270.5 million, up 16.2% year-over-year. FY 2025 adjusted EBITDA, $390 million. Q1 2026 adjusted EBITDA, $108.3 million, up 25.5% year-over-year. FY 2025 net loss, negative $119.9 million. Q1 2026 net loss, negative $66 million. Note, FY 2024 net profit of $458.5 million is believed to be a non-recurring item. The trend in FY 2025 and Q1 2026 reflects ongoing net losses driven primarily by high interest expense on approximately $5.07 billion in outstanding debt. Balance sheet highlights as of March 31st, 2026. Total available liquidity, $357.6 million. Outstanding debt, approximately $5.07 billion pre-IPO. Approximate pre-IPO enterprise value, approximately $9.25 billion. Implied EV to adjusted EBITDA, approximately 23.7 times, based on FY 2025 EBITDA. Key financial observations. First, accelerating revenue growth. Q1 2026 revenue growth of plus 16.2% year-over-year significantly outpaced the full-year FY 2025 growth rate of plus 8.7%, suggesting the business is gaining momentum, likely driven by AI-related demand and new contract signings. Second, EBITDA margin expansion. Adjusted EBITDA growth of plus 25.5% in Q1 2026 outpaced revenue growth of plus 16.2%, indicating improving operational leverage, a positive trend for the profitability trajectory. Third, debt-driven net losses. The net losses are primarily attributable to interest expense on the $5.07 billion debt load, not to core operational weakness. The adjusted EBITDA figures demonstrate the underlying operational cash generation capability of the business. Fourth, IPO as deleveraging event. This IPO is fundamentally a balance sheet recapitalization designed to reduce interest expense, improve free cash flow generation, and create financial flexibility for organic growth. Fifth, valuation context. At approximately 23.7 times EV to adjusted EBITDA, Csquare's implied valuation sits at a meaningful discount to public market leader Equinix, which has historically traded at 25 to 30 times or more, though Csquare carries substantially more execution risk as a pre-profit high-leverage issuer. Section 7. IPO details. Ticker symbol, CSQR. Exchange, New York Stock Exchange. Shares offered, 50 million shares of common stock. Price range, $23 to $27 per share. Implied deal size, approximately $1.15 to $1.35 billion. Midpoint deal size, approximately $1.25 billion. Over-allotment option, up to 7.5 million additional shares, a 30-day green shoe option. Implied total valuation, up to approximately $4.18 billion. Expected listing date, July 16, 2026. Lead underwriters, Morgan Stanley, TD Securities, Wells Fargo Securities, BMO Capital Markets, and Scotiabank. Directed share program, 5% of offered shares reserved for certain affiliated individuals. Post-IPO voting control, approximately 67.1% retained by Brookfield Corporation affiliates. Controlled company status, yes, exempt from certain NYSE governance requirements. Use of proceeds. Net proceeds from the IPO will be used primarily to repay outstanding debt obligations, including borrowings under the revolving credit facility, a promissory note, and various asset-backed security notes. Remaining proceeds will be allocated for general corporate purposes. Analyst note, dilution warning. New investors purchasing shares in the IPO should be aware of immediate and substantial dilution in net tangible book value per share. The company's high debt load and historical net losses have resulted in a net tangible book value that is materially below the IPO price range. Section 8. Competitive Analysis. Csquare competes in a crowded, capital-intensive market dominated by well-resourced public REITs and private equity-backed operators. Csquare's stated competitive differentiators. 1. Brookfield backing. Access to significant capital and deep infrastructure operational expertise from one of the world's largest infrastructure asset managers. 2. AI infrastructure positioning. Facilities engineered specifically for high-density GPU workloads, actively targeting the AI compute investment wave. 3. Geographic focus. Concentrated presence in 21 major U.S. metropolitan markets, providing strategic proximity to enterprise customers and minimizing latency. 4. Service reliability. 100% uptime guarantee backed by redundant power systems, built to N+1 and 2N standards, and 24/7 on-site staffing. 5. Rich connectivity ecosystem. Over 200 network and technology service providers available, over 36,600 interconnection products supported, creating a network effects dynamic that deepens over time. Competitive positioning versus public peers. Csquare's most direct public market comparables are Equinix and Digital Realty Trust, both structured as real estate investment trusts. Csquare is notably not structured as a REIT, a structural difference with tax and distribution implications. Equinix trades at premium multiples reflecting its unmatched interconnection ecosystem and global scale. Csquare's implied valuation discount versus Equinix reflects the higher risk profile, persistent net losses, much higher leverage, no prior public market history, and controlled company governance. Section 9. Management Team. Spencer Millay, Chief Executive Officer. Mr. Spencer Millay leads Csquare's overall strategy and operations. Full biographical details for all named executives and directors are available in the complete Csquare S1A prospectus on SEC EDGAR, registration number 333296826. Other key executive roles: Chief Development Officer, responsible for new capacity development and site expansion. Chief Revenue Officer, overseeing sales, marketing, and customer growth. Chief Information and Product Officer, leading technology platforms and product development. Board of Directors and Governance. Post-IPO, Brookfield Corporation affiliates will have the right to nominate a majority of board members for as long as they maintain their controlling equity stake, which at approximately 67.1% of voting power is expected to persist for the foreseeable future. As a controlled company under NYSE rules, Csquare is exempt from the standard requirement for a majority of independent directors on its board. This governance structure concentrates board control and decision-making authority with a single majority stakeholder whose interests may, at times, diverge from those of minority public shareholders. Section 10. Key Risk Factors. Risk 1. Controlled Company and Governance Risk. Brookfield Corporation will control approximately 67.1% of voting power post-IPO. This exempts the company from certain governance requirements, including the requirement for a majority of independent directors. Brookfield's interests may not always align with those of public shareholders, and it will effectively control the outcome of all matters requiring stockholder approval, including director elections, dividends, acquisitions, and future equity offerings. Risk 2. High debt load and persistent net losses. Csquare carries approximately $5.07 billion in outstanding debt pre-IPO. The high interest expense on this debt is the primary driver of net losses, negative $119.9 million in FY 2025 and negative $66 million in Q1 2026 alone. Even after the deleveraging from IPO proceeds, significant debt will remain. Profitability is not guaranteed in the near term. Risk 3. Customer concentration. The top 10 customers represent approximately 30% of annualized recurring revenue. The loss of any one or more of these significant customers could materially adversely affect revenues, EBITDA, and business outlook. Risk 4. Geographic concentration. Operations are concentrated across 21 specific metropolitan markets. Regional economic downturns, Severe weather, power supply disruptions, or regulatory changes in any of these key markets could disproportionately impact the business. Risk 5. Operational and infrastructure risks. Key operational risks include power outages and cooling failures that could violate uptime guarantees and trigger contractual penalties, physical and cybersecurity breaches, supply chain constraints for power infrastructure and data center hardware, and the challenge of securing sufficient new power capacity in constrained markets. Risk 6. Intense market competition. Csquare competes against significantly larger and better capitalized public REITs and well-funded private equity-backed operators. These competitors may have greater ability to invest in new capacity, offer more competitive pricing, or provide a broader global footprint. Risk 7. No prior public market and price volatility. There is no prior public market for CSQR common stock. The IPO price range of $23 to $27 may not be indicative of the market price following listing. Significant share price volatility should be expected in the period immediately following the IPO. Risk 8. Immediate and substantial dilution. New investors purchasing shares in the IPO will experience immediate and substantial dilution in net tangible book value per share. Section 11. Post-IPO growth catalysts. The IPO itself is the most immediate and tangible near-term catalyst. Repaying a significant portion of approximately $5.07 billion in outstanding debt will reduce annual interest expense by tens to potentially hundreds of millions of dollars, directly improving cash flow from operations and accelerating the path to net profitability. Catalyst 2. AI-driven infrastructure demand surge. Csquare is actively positioning itself as a beneficiary of the generational AI investment cycle. The company has engineered facilities for high-density GPU workloads and is marketing these capabilities directly to AI-focused customers. The scale of infrastructure investment being triggered by AI is creating demand that significantly outpaces the industry's near-term ability to supply. Catalyst 3. Capital-efficient under-roof expansion. Csquare's growth strategy emphasizes adding incremental capacity within existing data center shells where power infrastructure and fiber are already in place, a significantly more capital-efficient approach than ground-up construction. In December 2025, Csquare announced a $1 billion self-funded expansion package, demonstrating both financial commitment and execution capability. Catalyst 4. Interconnection revenue growth. Higher margin interconnection services represent both a revenue quality improvement opportunity and a direct profitability lever. Cross-selling interconnection products to the existing base of over 1,700 customers could materially improve the blended revenue margin profile. Catalyst 5. Hybrid cloud structural tailwind. The enterprise recalibration away from pure cloud-only strategies toward hybrid architectures is a structural and durable tailwind for carrier-neutral colocation. Csquare sits at the precise intersection of private IT infrastructure and public cloud connectivity. Conclusion and investment considerations. Csquare's IPO represents an opportunity to invest in a substantial and growing digital infrastructure platform at a clear strategic inflection point. The company brings meaningful scale to the public markets. 64 data centers, 389 megawatts of sellable power capacity, over 1,700 customers, and the backing of one of the world's most experienced and well-capitalized infrastructure asset managers in Brookfield Corporation. Critically, the financial momentum is building. Revenue growth is accelerating from plus 8.7% in FY 2025 to plus 16.2% in Q1 2026, and adjusted EBITDA growth of plus 25.5% in Q1 2026 signals genuine operational leverage. The company also sits at the intersection of two of the most powerful secular trends in technology infrastructure: the AI compute investment wave and the hybrid cloud enterprise migration. These tailwinds are real, large, and are driving sustained demand growth for exactly the type of high-quality, well-connected colocation infrastructure that Csquare operates. However, the investment case requires careful, clear-eyed consideration of structural risks. A $5 billion plus debt load, even significantly reduced post-IPO deleveraging, remains a formidable burden. Persistent net losses driven by interest expense mean the company is not yet delivering bottom-line profitability. Customer concentration at the top of the customer base introduces revenue volatility risk, and the controlled company governance structure, with Brookfield retaining approximately 67.1% of voting power, fundamentally limits the influence of public shareholders on all material decisions. At an implied valuation of up to $4.18 billion, with approximately $1.25 billion to be raised in the offering, the pricing will determine whether the risk-reward is compelling relative to publicly traded peers like Equinix and Digital Realty. The approximately 23.7 times implied EV to adjusted EBITDA multiple represents a potential discount to the sector leaders, but that discount may be warranted given the risk differential. Summary assessment. Bull case. AI-driven demand surge fills capacity rapidly. Post-IPO deleveraging drives net profitability sooner than expected. Interconnection revenue mix improves margins. Brookfield's infrastructure expertise delivers superior execution. The stock re-rates toward peer multiples. Bear case. Debt burden remains constraining even post-IPO. AI demand materializes more slowly or with different infrastructure preferences than anticipated. Competitive pricing pressure from well-capitalized REITs. Brookfield's interests diverge from public minority shareholders. The premium discount to peers persists or widens. Bottom line, the AI infrastructure megatrend is a genuine long-term tailwind that could re-rate the entire data center sector, and Csquare's scale and positioning give it a plausible path to participate meaningfully. Investors should study the full prospectus carefully, particularly the complete risk factors, audited financial statements, and use of proceeds details before making any investment decision.